Hello, folks. Welcome to Kudlow. I'm Larry Kudlow. So, as you know, former Fed Chair Ben Bernanke was just awarded a Nobel Prize in economics. So, a friend of mine suggested it was the worst Nobel Economics Prize since Paul Krugman. Well, I'm not sure I'd go quite that far, but that's probably because I know Ben, and I do respect him as a fine public servant and a very good former professor at Princeton. In fact, being a Republican on the Princeton faculty was not such an easy thing to do. So there. This isn't personal. But I think his stop-and-go policies, especially in the early 2000s, when he kept interest rates too low for too long, when he created way too much high-powered liquidity, when he took a strong dollar and made it a weak dollar, when all of his unsound fine-tuning created a boom in gold and commodities and housing, I think all that was a big bungle. And that bungle led to a financial meltdown, most especially a mortgage meltdown that he had to rescue later on. Kind of like a fireman who starts the fire and then wants to take credit for putting it out. Not good. It's all too reminiscent, by the way, of similar mistakes Jay Powell made nearly 2 years ago. Bernanke, post 9/11, was worried about deflation. So he authored a major league money supply helicopter drop, when in fact, the George W. Bush tax cuts successfully boosted post 9/11 economic growth. I raise this because Bush moved to the supply side. He doesn't get credit for it, but he should. He chopped down the top personal tax rate and obliterated the tax rates on capital gains and dividends. So everything was taxed less, including investment, and we got more of it. And the Bush boom did not require a major opening of the monetary spigots. We were doing just fine. Supply side work, the Laffer curve work. But Ben Bernanke wasn't watching this, and that's what got everybody into trouble. So does it sound familiar? Well, post-COVID, the V-shaped recovery in late 2020 and early 21 was ignored by the Biden socialists and the Jay Powell modern monetary theorists at the Fed. Remember, everybody was cheerleading for a $2 trillion stimulus package. That is, everybody in the left-wing camp. But we didn't need it, and it started a big inflation. And Jay Powell opened those monetary spigots wider and wider, even though the economy was growing at 6%, bequeathed by Donald Trump's tax cuts and deregulation and energy domination policies. So here we are again, only it's kind of a reverse rescue. Bernanke had to save America, he thought, by turning the spigots on, then off, then back on again. Jay Powell kept the spigots on, opened them wider, and now he's crunching down till there's no tomorrow. I don't know if this is modern monetary theory or what, but I do know in both cases it was bad monetary practice. There's an easier and softer way, incidentally. How about keep the dollar steady? Keep it steady in relation to commodities and gold and real goods. Keep the spigots at medium open, and we'll have price stability. Leave the growth incentives to tax and regulatory and limited spending policies where it belongs. The monetary lever is for inflation. The fiscal lever is for growth. Beginning with Ronald Reagan and Jack Kemp and Art Laffer and Steve Forbes and a whole lot of us, we've been saying this for over 4 decades. Now, one more point about Ben Bernanke's policies. I don't know why he and others are so determined to bail out failing institutions. You know, we had a chance during the financial crisis to get rid of some real turkeys like Fannie and Freddie, who should have been privatized. Or remember the craziness? Bear Stearns was bailed out, Merrill was sold, and Lehman was left to fail. Whole parts of AIG insurance could have been dumped or junked, but they were bailed out also. You know, Stanford's John Taylor has often written that it was the unknowable, erratic bailout policies that did as much or even more damage to the financial world as the opening up of the monetary spigots after the crisis came upon us. Governments shouldn't pick winners and losers. Still, today, it's incredible to me that Fannie and Freddie are now owned lock, stock, and barrel by the U.S. government, a.k.a. the taxpayers. We shouldn't be bailing out student loans, mortgage loans, gasoline prices, potheads, banks, car companies, semiconductor companies, electric vehicle makers, wind and solar farms, insurance firms. How about make my day? No new bailouts. Or make my day, $31 trillion of debt has gone too far. Don't you think? Really?